Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 16th of December. Starting off with Afc Energy, where there's been a good progress in the sense that the stock has been finding support at old resistance over the last few weeks. That old peak there in June around 32 pence, and that became the support area late November and so far this month. Nice gap to the upside overnight, and at least while we're above the initial December resistance at 40 pence rather, looking for a top of June trend channel target as high as 60 pence, hopefully as soon as the end of next month. Another stock which has been relatively reliable from a technical perspective has been Argo Blockchain, obviously rather less volatile than the underlying cryptocurrencies, but situation here is that we bounced off the floor of the rising trend channel from July. That was around the 10 pence level, and looks like the shares are trying to break out now through 11 to 12 pence. End of day close or weekly close through 12 pence could give us 18 pence, which is the top of that July trend channel, hopefully as soon as the end of next month. The upside value while we hold above the 10 pence area. Moving along to a stock which I'm very pleased about, just because it's behaved itself again with the technical setup. Yesterday I think we were around the 2.5 pence level, and it looked like we were in a bull flag at resistance, which is normally a very good bull flag rather above resistance, which is normally a very good setup. And today we had that spike towards 4 pence. We were looking for 4.5 pence, so hopefully we'll get that by the end of this month. And the upside value while we hold above the breakout zone, which is around 2.25 pence. So 4.5 pence while we're above 2.25, and especially while we're above 3 pence. So if you're looking for maybe a higher destination for the shares, that would be a resistance line, the one I'm just about to draw at the moment, which would be something along the lines of that line there from November last year, so heading towards 7 or 8 pence, but let's try and get to 4.5 pence for alpha growth, especially given how long it's taken to get where we are now. Stock which is back in business, at least, both on the fundamental and maybe the technical perspective as well, is Canadian Overseas. So we had the gap today through the 50 and 200, the 50-day moving average, in fact the 200-day moving average as well, around the 0.2 pence level, and also broken that line of resistance from August. But normally a gap through the 50-day line is a reasonable continuation move or recovery move, and the longer we stay above the 50-day line and the 0.2 area, the greater the chance of a move to the top of the June broadening triangle at 0.5 pence plus. Obviously that was also August resistance as well for the shares, so let's see how that pans out. Moving along to a stock which I don't look at very much, but has certainly deserved inclusion today, with the gap through the 200-day moving average at 101 pence. That's the black line there, and while we're above that on an end of day close basis, looking towards the top of the rising June trend channel at £1.40, hopefully as soon as the end of next month. A bit late on Deckel, largely because it's been a stock which hasn't tended to move very much, so any breakouts that have been so far have been false ones, but looks like with today's gap higher through that initial 2020 peak at 4.17, we may be on our way for a decent gain up to the top of the July 2019 trend channel at 6 pence for starters, while we hold above the 4 pence zone. So that's something to look out for, and obviously given how long it's taken for the shares to mobilize themselves, we might be hoping for a bit more than 6 pence over the early part of 2021, perhaps something like 8 or 9 pence, which would be that line of resistance there from the end of 2018, but at least 6 pence on the map for Deckel initially over the next few weeks. Stock which is something of a private investor favorite and has delivered the goods as far as the latest breakout is concerned is ECR Minerals. Here we are heading very close now towards the initial target at the top of the July trend channel there, 4.3, 4.4 pence, so we're not far off that. If we can get a weekly close above that, we've got a bonus move hopefully on the cards of a June resistance line projection currently heading towards 6.75 pence, and that could be hit as soon as the end of next month. The upside argument basically in play while we hold above the old 2.8 pence resistance from October, which became new December support. So above 2.8 up to as high as 6.75 for ECR Minerals. Interesting charting configuration at Gene Drive, which obviously been slightly painful in the post-November, post-vaccine period. But for those who like their technical analysis, we've got this the breakout of this wedge formation. We had sort of narrow new lows as well, which sort of kind of suggests that we may be ready to head higher. And now just nudging the 50-day moving average at 51 pence. But looks like we've broken that November resistance line, and also we've got bullish divergence in the RSI window. So that lower low for December was not matched by a lower RSI low, so that divergence could suggest that there is some positive momentum here. In terms of what the upside should or could be, back towards mid-November resistance at 60 pence obviously would be a modest target. Otherwise, we're hopefully looking towards the 50-day moving average at 80 pence once we clear 60 pence on a sustained basis. This stage, only really back below today's intraday floor, let's say 46, 47 pence on an end-of-day close, really calling the upside or the recovery into question at Gene Drive. Next stock is Iqai, which I wrote about yesterday and covered, I think, in the chart yesterday as well. We've broken that line of resistance there from November, and we're above the rising 50-day line at 9 pence. Above that, hopefully up to the top of the range, the post-November range at 18 pence or 19 pence. But obviously, end-of-day close back below the 50-day line and below 9 pence would delay or cancel the upside scenario. Ironveld, the next contender, and here we've had quite a rough ride, I suppose, slightly of the Gene Drive variety here, but the shares just breaking out of that falling wedge from September. Let's call it 0.45, the level there, so end of day close above that, and we could see at least a retest of late November resistance around 0.7 pence as a best case scenario. Again, quite bullish divergence there with that quite low, there at 0.32 versus the November low at 0.34. So bear trap, a rebound within that falling wedge. So hopefully there could be some decent upside there for Ironveld. Going on to the last two stocks, both beginning with Z. First one is Zanega, where there's been reasonable follow through after the break of 7 pence resistance above 7 pence. We're looking for the top of the rising trend channel from June as high as 11 pence, hopefully over the next 4 weeks or so, hopefully less than that. And Zoetic, the rug pulled a bit from the bulls over the last few days, but it may be that the shares are back on track now, bouncing off the 20-day moving average at 59 pence. While we're above that, still looking for a target towards the 90 pence area, which is the top of the rising September trend channel. So it looks as though Zoetic has sorted itself out after its sort of near vertical climb that we had at the beginning of the month. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.